Buy a new house but keep your old property taxes. Today's guest will show you how to do it. Coming up next on the Real Estate Insider. Hi everybody, and welcome to the Real Estate Insider. I'm Gary Kurtz, your host and real estate broker with Alon Pinella Realtors in Menlo Park. Today's show is Ask the Realtor. I get all kinds of questions about property taxes. When I buy a new house, how can I prevent my property taxes from skyrocketing? Well, if you fit the certain criteria, you can do it. There is a legal way to do it. It's called Prop 60 and Prop 90. Ron Ricard here, who's with IPX, he is an expert in property taxes. He knows Prop 60 and Prop 90, which he'll talk more about. But if you're interested in buying and selling property taxes, he can answer all those tough questions about it. Ron?
Thank you, Gary. Proposition 60 is a follow-up to Proposition 13. Proposition 13 is a law passed by California voters in 1978 that limited the amount that our property taxes could increase from year to year. So even if our property taxes double or our property values doubled, our property taxes wouldn't. And so what this means is that for many people, you've owned your property a long, long time, and because of that, your property tax rate has not caught up to your property tax value. So, for example, if you bought your house for, let's say, $200,000 10, 15, 20 years ago, and now it's worth $1 million, well, you're not paying your property taxes based on $1 million. You're paying your property taxes based on the $200,000 that you bought it for, plus any improvements, plus 2% per year that it was adjusted. So you may be paying your taxes based on, let's just say, $400,000 a year. So in 1986, California voters passed another initiative, Proposition 60. Proposition 60 was to help people downsize and not be hit by a huge tax hit. So for example, if you were looking to downsize, you finally got the kids out of the house, you wanted to move into a smaller property, and you had that $1 million property. Well, if you wanted to sell that $1 million property and buy a $700,000 property, under the old rules, you now would have to pay taxes based on that $700,000 property, the brand new property. However, from the old property, because you've lived there such a long time, you have a very low property tax basis. So Prop 60 allowed, under some circumstances, for you to buy a property of approximately lower value, I'll talk about that in just a second, and at the same time, get to keep your old property tax basis from your original property. Now, a couple things that are important about this. First off, this is only for people who are 55 years old or older. So, and if it's a married couple, only one of the people has to be 55 years old. So it's not for somebody who is young. It's for somebody who's at least 55 years old who could take advantage of this. Secondly, this is only once in a lifetime. So once you've done this once when you're 55 years old, you can't do it again when you're 65 years old. Okay, it's something that you can only do once in your lifetime. Third, when the law was initially passed, it was only good in the same county that you were selling. So if you were selling in San Mateo County, you had to buy in San Mateo County. If you were selling in Santa Clara County, you had to buy in Santa Clara County. The most important thing to realize in Prop 60, if you look at this slide, it shows that from the day you sell your property, you can buy your replacement property either 2 years before or 2 years after. And so there's a 2-year window on either side of you selling. An important thing here is that you have to sell your property when you are at least 55 years old. Technically, if you're 53 years old today, you can buy your replacement property today, and as long as you sell your current property when you're 55, and if that's within 2 years, then you are okay. Now, during the time you own both properties, you will pay the higher property tax basis on that new property. But once you sold it, you go down to the county assessor's office, you file the appropriate forms, and then you can now get the lower property tax basis on your new property. If you buy your property before you sell yours, the property that you buy must be of lower market value than the one you're selling. So in other words, if you buy first, it has to be of lower value. If you sell, then buy your replacement property. If you buy in that first year after you sold it, it could be actually 5% more than what your property was. If you wait a year and you buy the replacement property between 1 and 2 years after you have bought the property, you sold your property, it could actually be 10% more. So if you sell first, then buy, it can be 5%, or if you wait a year, it could be 10%. But either way, it has to be within that 2-year window of when you sell your property. Once you've sold and purchased the replacement, you do need to go down to the county assessor's office and apply for what's called a Prop 60 exemption to get that lower property tax basis. Please remember, while the county is doing the paperwork, you still do need to pay your property taxes. You can't avoid that, and if there's a refund due to you, they will send that to you afterwards. Also remember, it is the market value of the property. So if you wanted to kind of fake the price a little bit and sell it to a friend for a high price or a low price, no, the county is looking at the market value of that property. Also, there's another proposition that you are allowed to pass your property tax basis to your children if you sell or gift or have your children inherit property from you, called Proposition 58. You can't take advantage of both. So if you sell your property to your children and you want to take advantage of Prop 60 and have them take advantage of that lower property tax basis, you can't do that. You can only one party is allowed to take advantage of that lower property tax base. Couple more things that you might find interesting. Let's say there are two people who are over 55 years old and they wanted to each sell their house, and let's say they're getting married and they want to buy one house together. Can they sell both houses and we could add up the value and get that new property at a lower tax base? No, it's one property for one property. So only one property being sold can get that property tax basis transferred. How about a divorcing couple? You're selling one and you each want to buy a replacement property. No can do. Only one of those parties can take advantage of the Prop 60. So it has to go from 1 to 1. Now, about 2 years after we passed Prop 60, we passed another amendment called Proposition 90. And Proposition 90 allows you to go between counties. But this is only if the county that you're moving to says okay. And as of today, June of 2010, there are only 8 counties that you can move to that will accept that what's called inter-county transfer. So if you are in San Mateo, you can move to Santa Clara County, Alameda County, El Dorado County, San Diego, Ventura, Orange County, or Los Angeles County. Also, it does not have to be from one of the counties that accepts. It can be from anywhere in California into one of the accepting counties. So if you can be in Fresno, or you can be in Bakersfield, or you can be in Eureka and move to San Mateo or Santa Clara or Alameda County, and you can transfer your property tax basis from there to here, as long as it meets all of the other criteria of value, of age, etc.
Great, Ron. That's great information. Property values are so high here along the peninsula that any way you can save property taxes, it's a great benefit to all. And just to clarify, Ron, is that personal residences only, or how does that all work?
Yeah, Prop 60 is only for your primary residence. You have to be going from a primary residence into a primary residence, and again, this is only a once-in-a-lifetime exemption.
Great, perfect. And if you want more information on this, please contact Ron at?
My phone number is 877-747-7875, and that's a toll-free number. Call me anytime.
And I'll, of course, have a link on my website at luxuryrealestateinsider.com, and I'll have the information that Ron's provided today on there and the link to his site as well. That's it for today's show. Thanks for watching the Real Estate Insider. I'll see you next time. And don't forget, if you're looking to buy or sell property in the San Francisco Peninsula area and need a real estate agent, please contact me at any of the numbers listed here on the screen, and I'd love to work with you.